Hi, and welcome to Edolab Markets. Today we are going to work with two RSIs at the same time, using Edo RSI Dual. The idea is simple: the classic 14-period RSI tells you where the trend is, and a 2-period RSI tells you when a move is stretched right now. One is context, the other one is timing, and this indicator keeps both in the same window. On McDonald's weekly, the 14 sits at 34, in no man's land, while the 2 is already down at 13. That contrast is the whole reason for having both on the chart. In the window you have 4 lines, not 2. The white line is the 14-period RSI, the reference reading. The bright yellow one is the 2-period RSI, and you can already see it behaves in a completely different way. Then each of them carries a slow average. The blue line smooths the 14, and the dashed yellow line smooths the 2. Those two averages are what turn a nervous oscillator into something you can actually read on a weekly chart. The levels are the classic ones, 70 for overbought and 30 for oversold, and both are configurable. The zones are painted as bands, so you see the extremes without reading a single number. The dotted line in the middle is the 50, the level that separates bullish from bearish momentum. And the background carries a soft bias tint, taken from where the 14 sits against that midline. On the dollar against the Canadian dollar, the whole picture is neutral. Price keeps coming back to the middle of the range. Now the 2-period RSI on its own, because it is the part that surprises people. It travels from 0 to 100 in a couple of candles, and it does it constantly. That is not noise to be fixed. It is what a 2-period lookback does. It measures the very last push, and nothing else. On Oracle Weekly it is down at 3 while the 14 is still at 35. Extreme on the fast reading, ordinary on the slow one. Used alone it would have you trading every single week. Used as a trigger inside a context, it is a different tool. That combination is exactly what the diamond signals are for. A bullish diamond is printed when the fast RSI crosses above the slow one while both are down in the oversold zone. In other words, the market was stretched to the downside, and the short-term reading has just turned up. On the regional banking ETF you have two of them around the 2023 low, within a few weeks of each other. It is a confirmed cross inside an extreme, not a prediction. What comes after is still up to price. The mirror image is the bearish diamond, the fast RSI crossing below the slow one, with both readings up in the overbought zone. On Walmart Weekly there is a whole run of them through the top of that trend. And this is the honest part: the first ones appeared while price kept climbing for months. A bearish diamond says the push is stretched. It does not say the trend is over. That is why the signal is a diamond and not an arrow. It marks a condition, not an order. Below the lines there is a histogram, and it is simply the distance between the 14-period RSI and the 50 level. Above 0, momentum is on the bullish side. Below 0, on the bearish side. What you are really watching is the shape. Bars getting shorter mean the move is losing pace, long before any line crosses anything. On Dogecoin Weekly the histogram has been pinned below 0 for months, down at -16. Momentum that stays negative like that is a trend, not a dip. All of it is summarized in the dashboard, in the top right corner of the indicator window. The first two rows are the live values of both RSIs, each one tagged as neutral, overbought or oversold. Then the momentum reading, which is the same number the histogram is drawing. The state row is the quick read, neutral, near overbought, or near oversold. And the last two rows keep the last diamond and how old it is. On the uranium ETF the last one was bearish, 39 candles ago. In practice you read it in 2 steps, context first, trigger second. The 14 and its slow line tell you which side of the 50 the market is on. Only then does the 2-period reading matter, and only when it reaches an extreme. On the corn ETF the fast reading is at 98, deep in overbought, while the 14 is barely above 50. A stretch trigger with no trend behind it is exactly the situation to be careful with. Let's open the settings and go through them. The first block is display, and every layer can be switched off on its own, the 2 RSIs, the slow lines, the histogram and the zones. And the same for the background tint, the midline, the diamond signals and the dashboard itself. So you can strip it down to just the 14 and its average if you want a quiet chart. The dashboard has its own corner and a dark or light theme, to match the chart you work on. The overbought and oversold levels are yours as well, 70 and 30 by default, though 60 and 40 is a fair choice on calmer instruments. And the last block sets the 2 smoothing periods, one for each RSI. 14 and 14 by default. On ABVI weekly the defaults hold up well, and that is usually the right place to start. The indicator ships with 3 alerts, and you reach them from the Create Alert dialog. The first 2 are the diamonds, a confirmed bullish cross in the oversold zone, and a confirmed bearish cross in the overbought zone. The third one fires when the 14-period RSI crosses the 50 line, which is the momentum flip. None of them is a buy or a sell order. They tell you that a condition has been met on the closed candle. Edo RSI Dual is free and open source. You will find the full script on TradingView, and everything else on our website, www.edolab.io. Structure before signals. This is Edolab Markets, and we'll see you in the next video.